Thanks for joining us for Thoughts on Thursday. Well, trading buddies at the end of the day. It's my thoughts on Thursday, so it's nice to have you on board. A limited crowd at the moment, I've got to say. Let's get rid of that and go to that and show you my chart. Right, it won't be long. I'm getting there. As I said, thanks for joining us. It's nice to have you here. And Ash will be joining me a little bit later on, of course. He's in Singapore, I believe. I think there must be an IFP event taking place on the weekend. And he'll be joining me very, very shortly with all the guff on everything fundamental and FTSE, one would think, and, of course, whatever else is going on around the place. Righto, let's talk about gold and see if we've got a trade here today. Well, we will have one. It's just a matter of how we deal with it. I've got an order on gold, as you probably all know. I think I released this on Monday or whenever I released it, maybe last week, I can't remember. But we traded, did we trade this bar? Yeah, we traded this bar here. So that was last Thursday or Friday. Anyway, we're now finally got a little bit of profit going forward. Bit of retracement, obviously, today. Missed our TP1 by goodness no, well, by the spreads really at the end of the day. We had our first take profit at 18.30, as you can see here. If you have a look down here at what price actually it traded at, 18.29.98. Really? Really? Can they be serious? So 0.02 of 1 pip under our target. Of course, we need to go through that target to get our profit. And we went through it by 0.02 of a pip. Now, it's my thing that if I miss a TP1 by a minimal amount, and I consider 0.02 to be a minimal amount, then I move my stops to entry immediately, which I did. And I've now got gold stop loss at 18.52. That's it. So that's the daily chart. Let's talk about today. Today we've got a range. The 0200 bar would be that one. And so that's where we start our calculation, opening Tokyo. The low of the range at the moment would be that bar there. So let's identify that or isolate that. And the high of the range at the moment would be the high of that bar there. So let's isolate that. There we go, right on a resistance level. You don't want to go long there, do you? We'll see. But less than 2 minutes before this needs to be activated. I'd really like price to either go through there and get me out of the awkward spot of going long at this point, or retrace down to the middle here. I can't see that happening in a minute, but we'll see. Hi, Paul P. Looking good. Don't know about that. What, because I've had to shave? Or cut off most of the whiskers. Thanks, mate. Appreciate it. Not sure it's real, but anyway, it is what it is. So let's hang on around here for a minute and see if we can get this back down here. I hate to enter at that level. That would be not good for me. Anyway, we'll follow the rules, and the rules say we try the breakout, and whichever way that goes, we try and capture it. Now, there's been a lot of stuff around saying, how do we take profit here? Well, at the end of the day, we need to take profit at, as Ash would say, first contact. I'm using the pivots at the moment, and I think WS1, I can't even, DR1's way up here. So that's a pretty good gain. if we were to find that. DS1's not too bad either. So let's just go with that and put them in the market. So the high is 1842.58. Let's go with 1842.75. Buy, just because we can. Buy stop. Again, if you're trading this, please, please, please do not take any undue risk with this. It's very much a minimal stake. 1842.75. And stop loss. Low of the range, which is underneath that bar there. 1834.22. Let's go with 1834.15. 34.15. And take profit, we don't know yet. Well, actually, we do know. It's going to be DR1, which is, show me the level. Let's go with 1854. We can change that if need be. Righto, so that's the buy. Buy placed. Stop loss here, entries here. Let's reverse that and go with a sell stop. Make sure you check these, guys, if you are trading this manually, as I am. The other day, I had I must have placed a manual order on something else, maybe the same asset. In fact, it probably was. It was gold, and the volume was like 0.75 of one lot. And I certainly don't want to be placing 0.75 of one lot on this account. I think I can't remember what this account is, 50,000 or something like that. So I don't want to be doing that on something that's being tested. So make sure you look at the volume if you're placing these manually, because it defaulted to that 0.75, and I was triggered into this trade, and I was trading something like $40 a pip or something, and that's not what I need. Not what I need to be doing on a test. All right, entry level. So the short is, can't see the level now. Hate that. Now I can. 1834. Right. And the stop loss is 1842.75, I think it was, if my memory serves me correctly. And of course, as you all know, I used to remind the elephants. I say used to. I'm getting a little bit long in the tooth for that, I've got to say. The old memory banks, they fade after time. Just a real pain in the backside. It's also probably got to do with lifestyle, I suspect. Anyway, speaking of lifestyle, I know somebody who's enjoying a wonderful tropical equatorial lifestyle at the moment in Singapore. How you going, mate?
Yeah, I'm all right. I've got to be honest. I am recovering still from trying to get over jet lag. So it's not all
jet lag or bottle lag.
No, actually, no. There's been no bottle or bottle lag at all, because we've been working just solidly, really, just to try and make it a stellar event.
What a lot of BS.
I promise you. I haven't drunk a drop, and nor has he. I don't think, has he had any? No, he hasn't. Since I've been here, we have neither of us have drunk a drop. Yeah, it's just been just trying to get down to business, trying to do a good job on the weekend, and just trying to kind of take advantage of the fact that I am here, because I don't tend to come. I mean, normally I'm my office at home, so so the fact that I am here just means that we can sit together and run all the manuals, make sure the information's right, make sure it's nice and clear, and trying to get some sleep. But I can't. It's just impossible. I think I was up at 3 o'clock this morning. It's just difficult, to try and turn around the body clock. but I have been looking at the trades and I have been staying on top of things. I think
Nice.
it's been, yeah, I mean, interesting, mate. Really, what's been going on? CPI data from the States on Tuesday, was it, or was it Monday? It was Tuesday. CPI data from the States coming in a little bit hotter than hoped, I think, for most people. I think it was quite interesting that the market.
Mate, can I stop you there, because
yeah.
I haven't gone to, I've got a few or a couple of trades in the market. I better share them.
Yeah.
Before we come back to you, and I'll come back to you very, very quickly. It's just a very, very quick exercise. First one's EuroCAD. EuroCAD, we placed an order on Tuesday underneath Monday's bar, or was it? Yeah, Tuesday underneath Monday's bar. Didn't trigger. Got a new high compared to the previous day, which absolutely classifies or qualifies as a game changer bar. That was yesterday. So I've moved my entry up to underneath that bar, but I've maintained the stop loss under Tuesday's bar, because I believe if this goes to there, it's certainly going to there and probably to there. So I'll just squeeze that up a little bit. The entry level, if you want to follow it, is at 1.4291, and the stop loss is 1.4365. I've got a first take profits at 1.4245. I'm not going to take any, I am. I'm going to close 50% at that point. Sorry, it's the other trade. I'm not going to take anything off. The reason I'm going to do that is this is a fairly strong recent support level. And for that reason, you would think that there's a possibility it'll bounce here and go back to the monthly pivot, maybe even. If it breaks through here and retests that level, then I think we've got an excellent opportunity to make a truckload of cash here. The reason I'm happy to take this into that level is because I can take profit or get safe in the market as we hit that, well, it's a double bottom, I suppose, at the end of the day. The bottom of what? Bottom of nothing, really. And that's why I like it. I think this is out of context, and I think we can break through here and convert, I guess, what you'd call a triple top and a lower high. So looking at that one, we tried that once already, didn't get an entry. We'll have another crack at it on EuroCAD. The other one, which is a little bit suspect now because of the Aussie news today, which was less than, or was it less than ideal? You know, it's really, really hard for me to get, not being a fundamentalist, to get a line through what employment figures and other data that's coming out at the moment actually means. In a non-inflationary, non-high interest rate or rising interest rate scenario, you would expect that an unemployment rise or rise in unemployment would tick or instigate, if you like, a sell-off of that currency. I'm not so sure in this environment whether that's the case. And I'm similarly thinking in inflation figures. If we saw that on the pound, I think. When the CPI goes up at the moment, and generally that's considered to be good for the currency, I don't know that that's the case anymore, because we are in that high inflation, high interest rate scenarios. So I'll get your thoughts on that in a minute, Ash, because I'm, as you know, completely not a fundamentalist. But to me, it seems to be counterintuitive, I'll put it that way, the current situation. Anyway, I've still got a little bit of faith in the Aussie outperforming the yen in the short term, and that pullback yesterday, pretty much I'm playing an ABC off this trade line. Now I know that it's got that much upside. If I look at the weekly chart, I'm probably expecting here somewhere. But in the interim or the short term, go back to the daily, I can see this level here as being a potential target, and that's where I'm going to take our first profit. I will close a third, and if we can get up to here, I'll probably close most of the rest of it. Interesting, this channel has failed, and as you all know, if you follow what I do, it's all about trading top to bottom, bottom to top. Failed to go beyond this support level, and to me that's significant. And now it's broken and retested a resistance level. We've also, if you go a little bit wider, come back above this, what I suppose really equates to a neckline, but I won't call it that. I'll just call it a support trade line. We've broken it, consolidated underneath it, entered above that line and retested it. To me, that's bullish. And as I say, I'm not sure we get a whole lot out of it, but up to here makes sense to me on Aussie yen. The gold trade I've mentioned that we're still in short, and that's it, mate. They're the only two that I have got orders on at the moment. Neither of them has triggered.
I have to say, the Euro CAD short I really like. The CAD actually, the Canadian economy is it's posted some some brilliant numbers recently, and you know, the euro is in a much more much weaker spot. On the employment data, you know, what we are seeing is, yes, the CPI data is still kind of filtering through into suggesting that the central bank of that particular region would continue to raise interest rates, which would obviously be bullish for the currency. But the unemployment data, when the unemployment data starts to build, then it's a disinflationary gauge. You know, it's something that should suggest a lack or a loosening of demand, and then potentially bringing prices down, which would be bearish for a currency, because the central bank is you know, almost kind of looking for clues that they firstly are beating the inflationary narrative, but at the same time not going so dangerously high on interest rates that they start to choke the economy and subsequently affect people's jobs. And one of the gauges they'll look for when they're looking to potentially pivot would be a low employment level, you know, so unemployment starting to pick up. That would suggest that the final piece of the jigsaw, certainly for the Fed, is taking hold.
Sorry, go again. Unemployment picking up.
Yes.
So in other words, a higher number.
Yeah. So if unemployment sort of starts to print higher numbers,
so more people unemployed.
So more people unemployed. Yeah.
Yeah.
Yeah. So what they've got right now is a tight labour market.
And of course, there is the obvious result of that is less people employed. Well, put it the other way: the tighter the market is, the more people who are employed, the more likely we are to get wages rises, right?
Exactly, because, you know, to be able to get the kind of workers that you need, you're going to have to offer more wages to attract them over to your company, and then you just get this wage spiral. So if they're in a situation where they've got more workers to choose from, then they don't need to be raising wages so high. You know, they can offer lower wages because people will be thankful for the job. So it is disinflationary, and that's why it's an important number. It's an important gauge for the likes of the Fed, and really that's the final piece of the week. That's the final piece of the jigsaw puzzle for the week for the US dollar, because we've had CPI data, which, okay, yes, you could definitely argue that there were things to take out of the number, i.e. housing, which is one of the things that when they took it out, when they stripped it out, actually we did see a lower print. But you could argue, you know, the CPI number was dangerous, still dangerously high. But you could also argue that there was the factors in there which would suggest that it is still easing. We had the retail sales number yesterday, which showed the consumer was very, very positive, and suggests that the Fed could keep interest rates higher for longer because you know, they don't need to worry about crashing the economy. But if we see a weak jobs number today, then I suspect the dollar's going to suffer. What's that? The euro dollar, yeah. So there's the euro dollar. Yeah. So you'd expect, you know, a continued tightness in that labour market would suggest that euro dollar would probably weaken today, and it's going to be, and this is the thing about the euro CAD, is you know, I think the Canadian economy is in good shape, and you know, some of the numbers we've seen out of Canada have proved to be very, very good. But for the Canadian dollar to outstrip everything but the dollar, it kind of needs the dollar to show strong numbers as well, you know, because it's of the regional sort of aspect to it. So I think if we see some decent numbers, so 1:30 UK time which is what that's going to be, what, 4, it's about 9:30 here. So at 9:30 we see a release of US jobs data, and that will probably move your trade, I would suspect. That'd probably be a bit of a driver. But I really like the Euro CAD as a short. The Aussie yen is a bit of a different picture, as you say, because that unemployment, because those employment figures came out today weaker than expected.
Yeah, it's throwing a spanner in the works.
It has. We've got people sort of still quite keen on the yen, but without any real reason to buy it. And it's more probably likely that we see other currencies weaken rather than the yen strengthen.
Yeah, that's an interesting prospect then, isn't it?
Yeah. So,
and really, how and what you say is probably spot on as far as I can see. How can you trust the yen at the moment? It's really tough.
Yeah, it's very difficult.
Every time it gets a little bit of a wind in its sails, you think it's going to get knocked down, and really, it's got every reason to get knocked down, doesn't it?
It does. And I think what's the potential positioning on the yen is that people are just, investors and traders are probably looking for that data or news point that's effectively unpegging that yield curve control. As soon as they decided, okay, we won't be doing the yield curve control anymore, then the yen started to strengthen, and it started to strengthen pretty rapidly. And I guess people are sort of, waiting for another one of those announcements, because it is such a laggard when it comes down to interest rate rises. Everybody's looking for the yen to start catching up, the BOJ to start catching up. But you'll miss that move, because by the time the announcement's out, it would have moved within moments. All the AIs and trading robots will pick that up and push it a lot higher very, very quickly. So I can see why there's still people building positions in the yen, but trying to pick where it turns is difficult. But if you focus on the other currency instead, then you could start to build a picture to put the yen in that particular currency pair. Might not be the best, but you could make that particular case. I would get that. So there's a few things, mate, but I do think that the employment picture in Australia suggests that there's unlikely to be an explosive move to the upside in the Aussie versus any of the other pairs. Certainly today,
it does.
maybe tomorrow.
Which is a shame, because I think it. Well, when I say it's a shame, it depends on where you sit, of course. But I felt the Aussie had excellent prospects prior to that announcement.
Yeah, it's had probably more positive releases than negative. Interesting as well. The M1 inflation expectations was out as well, and it's not really a metric that people will put a lot on, but the expectations came down from 5.6% down to 5.1%. So also an anticipation that the RBA are getting on top of the inflation picture as well. But as we've seen in the States, which I think was forecast to a degree, we've just seen not so much that we're still getting disinflation, because I think we are, but it's slowing right down, and the suggestion is that it won't stop at 2%. It's much more likely to stop around about somewhere between 4 and 5, maybe 4 and 6. It might float around that level before we actually see the final dip, which could take up to 12 months, 18 months, 24 months, who knows? But it certainly suggests that the Fed could stay the course for a bit longer, not look at that pivot that quickly, which is what the market was anticipating for such a long time. If we think about the Nasdaq, and obviously the Aussie yen is linked to this kind of stuff, but I was just looking at the Nasdaq before we came on air, so I'll just show you the chart of the Nasdaq and where it's interesting, but quite a difficult trade call at this stage. You might need to give me.
Yeah, I had a bit of a look at it. I've got my own ideas on it as well. Yes, right. Sorry, have you not got the power to do it?
No, I've got no power. Came in the back door.
I'm not going to even comment on that.
I know we're getting banned again, mate. We're getting banned for I don't know.
Yeah. What have I done now?
I haven't got a clue.
Actually, I think you said it a couple of weeks ago, and I was either humming a tune or singing something.
Maybe.
And you said, we're going to be in trouble again. and sure enough, Sony Music's going to sue Paul now, isn't it?
Oh, unbelievable. Unbelievable.
It shows you how the quality of the rendition must have been amazing.
Oh, it must have been a good rendition. Yeah. Quality of the rendition and the AI that they're using to pick out what you're doing. I've got a pen at the moment.
I must look at the replay of that day.
I just did, and I didn't pick anything up. Yeah.
Oh, didn't you? Okay.
I'm not sure what's going on. So here we go. So we got the Nasdaq here, and I think there's a few pointers here, a few things to kind of point out. And the first thing is that it seems to really want to push into this area. Seems to really want to kind of push into the 13,500 sort of zone. It could be there, might be a little bit lower, or it might be a little bit higher. I'm either using this closing level or this closing level down here. I've
got 12,850. I think that's a far more interesting level.
12,850. So it might be different on the futures to what we've got now.
Okay.
But you know, but also where we are now is another interesting point. You know, where we currently sit. It's also got a pretty strong horizontal level. We haven't taken that area out, but it seems to want to go up to that particular point. But I do wonder whether after we have touched this area that it just plummets and it just comes down pretty hard. Because if the expectation that the Fed are going to start to pivot or at least pause doesn't come to fruition, and it's looking all that more likely that they won't be pivoting or pausing. Certainly the pivot's pretty much out the window, but the pause certainly could happen. But that pause just drags on and drags on. If that comes through, and the next earnings season we start to see further weakness in some of the top line of these and the bottom line of some of these companies, then the Nasdaq's likely to weaken. Then the interesting point is that some companies have done very well. Cisco reported yesterday, and businesses seem to continue to invest in Cisco products. So not everything in the Nasdaq has been hammered. Not all technology has been hammered. So it won't be a zero-sum game.
But what about the FANGs, which are really the benchmark, right?
Yeah, the banks aren't on the Nasdaq.
No, not the banks. The FANGs.
Oh, the FANGs. So there's been a lot of cutting of the workforce, and that's really quite bullish for a company because you cut down a huge expense. Like wages. Yeah, then it should help the company's profits, and I guess this is maybe the key, and maybe the potential takeaway for investors is that these companies are going to be okay, and they will do what's necessary and get out in front as much as they can, and as much as they need to protect their growth. Because we've seen Facebook, Meta.
As much as I think that's immoral and the way of the world, and has been the way of the world, and why I got out of corporate life in the 1980s, because that's exactly the way the world went. Everything became top heavy, where you had executives being overpaid and the workers, well, they weren't necessary anymore because, computers and stuff like that take over and all the rest of it. Well, this is the thing. That's the world we live in.
Yeah, and they're in the best possible position to utilize the technology to not need the workers that they currently have as well. So that's the one aspect of it. The other thing is, the inflationary environment isn't just provided by what's going on with producers. It's also the people that are putting whatever the product is into their systems and into their products and then selling them on. And so as they sell them on, they raise their prices. So, the likes of Microsoft, Apple, Amazon, all the costs are going up, yes, but so are their subscriptions. So they're probably relatively well covered on that front, and the fact that they're cutting wages. So I guess that's one of the reasons that the Nasdaq is still showing some resilience. But if we see that coming out the next time round in the next earnings season, we see some reduction in some of these balance sheets and on the profit lines and on the bottom lines of the balance sheet, then there's every chance that we do actually see the Nasdaq come down from there, because it doesn't seem to mind that Jerome Powell and co continue to state the same thing. We're keeping rates where they are. The picture is not yet sufficient to suggest that we should be pivoting. Unemployment numbers are still quite high. Unemployment numbers are still very low. Employment numbers are still very high. We've got retail sales coming out, which are positive. And yes, that encourages the Fed to stay the course, but it also suggests that the consumer's okay in the States. So we kind of got this counter sentiment going on where, yes, investors are quite concerned, but they are also looking at the numbers and going, but why are we concerned? We shouldn't really be concerned. Yes, it was brilliant when money was cheap and liquidity was available, but these companies are surviving well, and they are showing some pretty robust strategies to stay in front of the market. So I think the Nasdaq probably still got some further to go, but I do think it's going to turn. I think it's going to turn at some point, maybe back to the lows, maybe down to the pre-COVID lows. I do wonder whether valuations in the end will prove to be too high at these areas. Going up to these points at this stage seems impossible.
It's a bear market. Look at that chart. It's a bear market.
It's a bear market, yeah, and particularly when you look at the monthly, we've still got this as our lower high, and that would suggest that the lower high. We've got a lower low down here, and it would suggest that we're carving another one out in this area somewhere, and going to fall down. The seasonal bias is.
I'm on board with that.
Yeah, so I'm looking at that. The FTSE just continues to confound in many respects, because that just is just on a tear. We broke 8,000 early today in the
new high.
Yeah, new high. They've had a great year because of what's happened with oil, and the likes of BP and Shell really benefiting from the higher prices of oil. And we are now seeing China come back on board, so that's also helped some of the companies like Rio Tinto and Anglo America and the mining companies. So we're seeing that the FTSE continue to stretch its legs, and I don't see the top with this one. You know that it's coming sometime, but there's not really a lot at this stage that the Fed seem to be doing, which is going to affect this. And there's not a lot the Bank of England are doing, which is going to affect this. The Bank of England numbers yesterday still at 10% CPI. I mean, it's crazy high. Yeah. Average earnings still pretty high, but other metrics just show terrible weakness in the economy. And even if the Bank of England do continue to tighten, you kind of get the sense that they're not going to be the same as the Fed, where the Fed may have the luxury of time as the economy remains robust and it changes slowly. But the British economy is going to whip down pretty fast when it gets going. The snowball effect, I think, is going to be pretty fast. Brexit is just hounding and hampering everything. So I think that this will come back and test, but trying to pick it as a high and not continue to go with the trend, too dangerous. So better left alone. It would bring us to things like gold. I make a bit of a rule that I don't like to trade before an IFP weekend, because I don't like to kind of get caught in anything. I don't like to have the potential chance of maybe even having a loss of that sort of thing going into the weekend. Not that it affects my psychology hugely, but nobody likes losing, and I like it very little as well. So I don't like to trade into something like this. So I won't be taking anything, but I am interested in things. I'm still interested in. So my long, if the numbers come in a little bit weaker on employment, would be gold. Gold has now managed to pull back. I suspect they're not necessarily that we're going to get all the way back to the highs, but the fact is we might. And we've had such an important and significant run to the upside. I think there's plenty of buyers still in this market that have just been waiting for an opportunity. And whether they get in here and rocket us back up here, or at least be able to get us up to the weekly or monthly pivot, I would suspect that the chances of that are pretty high. So I'm looking for
That said, if I can just take 5 seconds to comment on that.
Yeah.
And I know very little about gold trading, to be honest, and I've only just started taking interest in it in the last 6 months or so. Well, maybe 12 months, or is it 2 years? I don't know. Time flies when you're having fun, of course. We knew that from late November through December and into January or through January that there's a seasonal bias for gold to rally. Now, some of that's based on India wedding season or whatever the case may be.
Yeah.
Who cares about the reason? It's a thing, right? And everybody who knows who deals or trades in gold is going to be buying through November, December, and January. We saw the result of that, right?
Yeah.
And now, and actually, I brought this up on Monday, and I didn't have an answer for it. Obviously, if I asked the question. Does the seasonal bias, which now changes in the second week of February, as I understand it, it changes from, does it change from bullish to neutral, or does it change from bullish to bearish?
It changes from bullish to bearish over the course of the next few weeks, but there is a slow drip down rather than a big push. It doesn't. I mean, the bearish move in gold tends to be relatively gentle. We tend to get this spike, which we've seen, but the spike was a week or so early. But we do tend to get this spike up and a flushing out, and then just a big spike down. But then we do tend to drift to the downside rather than collapse. And I guess that's my point, that can still happen if we were to see gold possibly move in a way that it does maybe just start to pick up a little bit around here and just create a very short-term trend back up to the upside here and then back down again. Then I wonder whether there is maybe a little bit low with gold. But I suppose my point is that because the move to the upside was so strong, I would have thought that at every single support level, significant support level, there is going to be a group of buyers that have just set their orders. And yes, they're waiting for the fundamental and maybe even the seasonal data or the COT data just to kind of back up what price they're trying to get in at. But I still think that they would have a pretty good chance just on the price alone to push the price of gold back up to a resistance point before we do start to see it come down again and maybe stay in an area for a few months. Maybe it stays in that lower band for a few months, but doesn't collapse. Because if you look at gold,
don't be like that. I'm short. It's got to go lower.
Oh, you're short. Well, I think short's okay too, because if you look at gold on the weekly, there is a little bit lower for it that it can come. Before I think that there's probably a lot of big orders sitting. I think that somewhere in about the 1860 on the futures would suggest that that this is where the larger orders would start coming into play. But with gold,
well, I guess that's the point of my question.
Yeah,
the point of my question was, okay, if we're now in a selling bias, seasonally, when does that end? And okay, buyers are queuing up. I get that. There's absolutely no question about that. Buyers are queuing up to buy gold. Are they waiting for the seasonal change? Are they waiting for? Well, we won't see the Fed for another 3 or 4 weeks. What are they waiting for?
I don't think the seasonal change. I think anybody that would look at gold purely for what's happening on the seasonal chart would be losing money. I think that the seasonal bias with gold has a very, very strong correlation to the price, unquestionably. And we heard in Bali how somebody trades gold on the lunar cycle. So there is a correlation with price. But I do think that there's got to be an element where you kind of bring it back to the fundamentals, and the fundamentals, you really want the fundamentals to kind of match that seasonal bias before you take the seasonal bias on board unquestionably. Because if you'd traded seasonally on gold in 2022, you would have got smashed to pieces.
You got hammered, yeah.
Yeah. So I don't think you can make the case that the seasonal charts are enough to take a position in gold. I think you have to kind of, you've got to be aware of them because it does have such a strong correlation to price. But I don't think you can trade off the seasonal charts alone. And I will bring up the seasonal chart so you can see it. Let me just sign in here because I'm just going to sign into this website and then you can see what it's saying on gold.
Okay, while you're doing that, I think that once we hit 2,000 on gold, then I don't think there's any turning back for some time. I think it'll go through 2,000 on to wherever, I don't know, wherever they choose to take it. But I don't know that that's yet, frankly. I really just don't know that that's yet.
No.
And that's why I'm fishing for a reason to buy gold. And well, at the moment, I still can't see one.
This suggests July. This is where we currently sit right now. So we're just coming up to the end of February now. And actually, so it was a bit early, as I say. The spike up and then the move lower was a week or 10 days early. So usually around about the 24th, we start to see that spike up and then a move down, a move lower, and then another leg lower before it starts to move back up again. This is the way that, and at between this point and this point, I think you'd have to describe gold as in a range, even though we do see sort of, tend to see sort of some big moves down. There's also some equally big moves up, and actually it ends up higher by mid-April or the first week of April than it does if we take it from this point now. But after that, then we start to see this slow drift lower right the way up until the middle of July. And then that tends to be another bullish period for gold until around about the end of August. And then we do take a big move down. So I guess if you were to kind of consider this point of the year, personally, I would describe that as sideways, with some peaks and troughs. It's just not, it's not this, which is really clear. And it's not this, which is also really clear. It just seems like it's the potential for gold to weaken a little bit is there, but if you were to hold on to position and trade the seasonals. But really, this is another reason that you couldn't really use the seasonals, because you'd be getting into the minutiae of which day it starts to turn, and we've already seen evidence that it doesn't really work like that, because we've seen a high on gold. And it suggests, but according to this, that gold should be running until the 24th of February. So we're still 8 days away from that particular point, and yet we've seen gold, I don't think you could say collapse, but it's come down a fair way from its highs. So the seasonals are much more of a band than they are an exact science. And because of that, if you are going to use the fact that you want it as an exact science, then you better be pretty good on your fundamentals, because then you need to say, well, okay, I'm going to buy it on the 27th, or I'm going to buy it with the lunar cycles. No problem with that either. But it's because I've got a pretty good idea that we've got a Federal Reserve meeting here, and the likelihood is the Fed are going to be loosening interest rate policy, so that will strengthen the gold. I mean, if you coupled that in, I'd go along with the seasonals. But just to look at this seasonal chart and say I'm going to trade purely off, when the seasonals start to dip and turn, I think you're asking for trouble.
Yes, absolutely. You have rocks in your head, because, as Harry points out in the chat, we're now 1 year, 24th of February, 1 year war gold. Are we 1 year into the war?
Yes.
Isn't it longer than that?
Yeah, no, it is. Yeah, right. Yeah.
Well, there's a factor, right? Straight away, there's a factor.
Yeah.
Here's another factor. We've also got inflation running at, take your pick, 7, 8, 10%. Depends on the country you're living in, I suppose. But let's say it's 7.5%, just to be fair. Gold traditionally is a hedging against inflation, right?
Yeah.
And you're going to have to ask yourself the question, if that's the case, seasonality or not, how do I position myself, and why isn't gold beyond 2000 at the moment, given the circumstances. And how do you answer that question? And I guess the answer has to be, if you look at gold, I don't know, for the past 5 years, 6 years, however long, versus the likes of NASDAQ or name any company, Bitcoin, name any asset class, name any asset.
Yeah.
Gold has outperformed just about everything on the planet. In fact, it's outperformed everything on the planet. There's no question about that. So it is, we say things are priced into the market, right? And I think this hedge against inflation is priced into the market.
Yeah.
So where do you go from there? To me, I don't know. I can't get a clear line on where you go right now with gold.
So this is the some of the important aspects, and I know there's gold traders in the room, and if you are a gold trader and you're looking to specialize in gold, it's really, really important that you understand the US 10-year yield, because if you don't understand the US 10-year yield, you won't ever understand what's the villain to gold. Because if you want something to fight against gold, it's 10-year yields. When the yield goes up, gold suffers. When the yield comes down, gold does really well. And the 10-year yield is then linked to what happens to the Fed. So what the 10-year yield is telling us is, we believe interest rates will be this particular price in 10 years' time. So if the 10-year yield sits around about 3.7%, I can't remember where it is, but it's in and around that figure. If it's around about 3.7%, the market is saying the Fed will be lower in 10 years than they are today, because it's, the federal funds rate is at what, 475 or 450, something like that. But so it's 475. So they are saying, so the 10-year yield, the bond buyers are saying the Fed are going to have a lower interest rate in 10 years than they are today, which is good for gold. But if they start to ramp that up again, then you start to see gold come off. Now, the reason that the gold didn't perform very well when inflation was kicking, really going somewhere, was because the Fed was keeping pace with the inflation with interest rate hikes. Now, where the environment will soften now a little bit for gold, so the move won't be quite. And what happens, ultimately, when the price started to spike to the upside, it was when interest rates were assumed that they'd be slowing, and yet inflation wasn't really kind of coming down sufficiently. So you had higher inflation, so gold still acting as a hedge against inflation, but reduction in yields, because that people were saying, the Fed have gone this far, I don't think they're going to be going too much higher over the next 10 years. I think they're going to be lower than they are today. So we saw gold rally. Now, over the last 3 sessions, what we've seen over the last few sessions, what we're looking at, maybe 10, over the last 10 sessions, what we've seen is the Federal Reserve come out and say, you guys have got this wrong. We are going to be higher for longer. Then they've been backed up with data which would suggest that they will be higher for longer because the inflation number isn't coming down anywhere near as much. And then the 10-year yield pop up. So the 10-year yield pops up, gold comes down, and inflation is coming off as well a little bit. So what we really need to see is unemployment picking up. And this will be the perfect environment for gold. Unemployment picking up, inflation dripping down slowly, and a market which is weakening, an economy which is weakening. That will suggest that the 10-year yield comes down again, because the Fed won't be assumed to be raising interest rates into weakness in the market and a lower employment figure. But it will also be backed up by the fact that inflation is sticky, is still staying around an area. So that will buoy gold. That will move gold a bit further. But what we've seen over the course of the last 2 years, particularly, is Bitcoin flying to the upside, crashing to the downside. The NASDAQ flying to the upside, crashing to the downside, and not recovering. That's the third part of it, not recovering. The dollar flying to the upside, crashing to the downside, and not recovering. Oil flying to the upside, crashing to the downside, and not recovering. So the question gold buyers have to have here is, are we in one of those situations where we've flown to the upside very, very quickly, we crash to the downside, and we don't recover? Well, the answer to that probably lies in the environment. Is the environment the same that caused the first move to the upside? Well, it isn't right now. It's changing. It's softening. Are we now going to go for a period of the next 3 to 6 months where markets just sit in a range for a little while, even gold? And as I say, I think there's enough strength in the gold bull's mind to say, I've got a bit of a bargain down here, so I will buy up into this area. As they have the NASDAQ, as they have oil, haven't yet done it with the dollar, but they're starting to potentially do that. But there's no follow through. So actually, when all's said and done, the problems that were there that pushed gold to the upside before aren't actually there. So we just drift back down again. Then we drift back up again, and then we drift back down again. So that's really what I'm considering. Not whether gold is going to go up and then beyond, but whether we now just stick in a range and we try and find out where the bottom of that range is and where the top of the range is, and we just basically trade from the low to the high. I've got very little confidence in picking a direction of a lot of markets right now over the longer term. I think it's really tricky. I think oil's really, really tricky. When you look at what's happened with oil, it's very hard. And what we saw over the last few sessions, what the last few periods is, the US have just increased their inventory count. So they're storing loads of oil, which is really bearish for the price of oil. And we don't have the same push going on with Putin and oil. That's all been priced in. That's all calmed down a little bit. So even though what we saw previously would suggest there's a bottom, let's now go, let's buy it and go, the environment's changed. So I don't think we get that. Yes, we've had it in the past. The last 12 months have been particularly bang up, bang down, stay where you are for a bit. Whereas prior to that, it was bang up, bang down, bang up again. No problem, So we were used to that W going. How many V shapes have we seen in the NASDAQ over the last 5 years, mate? It was just immense. It was crazy. Yeah. But that's not happened this time. And you have to sort of wonder whether we getting a message here that the euphoria that creates these huge moves actually does, it is dissipating, because there is a significant change going on in the world, and a significant change in the market. I'm not saying that won't happen with gold. All I'm saying is that I think we need to be a bit careful to suggest that just because we've picked a bottom, it might only be a periodic bottom in the market. It might not be the place to get in and hold.
Yeah, look, that bottom is very important, of course. Well, if you're of the opinion that, and we know what's happening, we know Russia and potentially China, some sort of what they call them, the BRICS, are having all of these conversations around digital currency backed by gold.
Yeah.
It seems to be a fait accompli that in some way, shape or form, the digital currency now, rather than being backed by nothing, is now recognizing that it needs to have a base.
Yeah.
And that base traditionally and I guess contemporarily is now looking very much like that's going to be gold.
Yeah.
Therefore, I cannot see. Well, I was dead set keen on gold going to 1,200 12 months ago. Yeah. That's now off my radar completely. Yeah. But what I really do want to see is the opportunity to buy it. If you're prepared to take, the attitude that, and some people are saying 3,000, some people are saying 10,000, some people I heard the other day an incredible figure that I won't even mention, but it's got more zeros on it than
James Bond
history at the end of the day. Yeah. So, and I'm kind of buying into that. I haven't bought gold, but I'm actually buying into that that conversation.
Mate, I would agree with you. But my only issue with it is that the market will move when it sees something relatively immediate about to happen. Relatively.
I was just about to burst into a song, but that would have been appropriate. But
So, because people
maybe
in a
if I say it
position
slowly,
no, because we'll
still
get a
won't work.
whole big muting. But yeah, so people will position for the next 6 to 18 months. No doubt about that at all. But when it comes down to what's the longer term picture, and you are talking about something which is quite a bit in the future, if you listen to what the central banks are saying about CBDCs, because they're, and Russia probably are further behind anybody else. I don't know that for sure, but the UK, as an example, have talked about CBDCs in the early throes of testing, and with the assumption that they'll be released in the next within about 5 years, so that we might see the first CBDC in around about 2027, 2028. I don't think, if that was the correct date, if that was the right time, I don't think there'll be a lot of investors at this stage getting involved in gold looking out that far, unless you are really, really keen on it already. And what you need really for gold's price to move sufficiently and have an explosive move is for everybody to be on the side of that particular trade. Everybody just wanting to buy. But I think that there are sort of some speculators that would be quite happy to think the same as what you're talking about, and I'd agree with you as well. And be quite happy to say, well, you know what, well, let's just buy some and wait on it for a 5 years time and see if that does take hold, because I'm not going to time it anyway. But there's going to be others that are basically looking at what's happening to the 10-year yield, what's happening to inflation, what's happening to the Fed, what's the next move for the Fed, what are central banks doing when they're buying gold right now? Are they storing it? Are they selling it? Are they increasing ETF positions within the market? What's the kind of the hedge with gold for some of these
tick at the moment? Yes, they are.
Yeah, this is the thing. So, and that's the thing that will drive it into the immediate future. And when I say immediate, I mean 6 to 18 months. So that's the thing that's going to drive it in the immediate future. So I don't, even though there's a decent case to be made for that, I don't think it's a tradable opportunity. I think it's an investment opportunity. That you park it, you'd buy it and you'd park it.
There was some nice Valentine's Day gold coins that you could have bought yesterday,
right?
Day before, whenever it was. Maybe that's the way to go. Just store it that way.
Yeah, I think so, mate. I think just buying some little bits and pieces, which is never a bad way to invest anyway. Buying some little bits and pieces of stuff that you're willing to ignore, because it doesn't, it hasn't really cost you a lot. And I'd say the same with the likes of Bitcoin and other cryptocurrencies. I won't go through a list, because it's not a market call, but it's just basically stating that it's worth having a punt on this stuff because you don't know what's going to happen. The truth is that Bitcoin's probably got just as much chance of going to zero. If you consider that CBDC conversation, then it's got just as much chance of going to zero it has going to 100,000. But if you're going to be spending so little of your money, hard-earned cash, that you don't really mind where it goes, then I think it's a worthwhile exercise. Gold's obviously a completely different conversation, but really the point is that if you are investing in stuff, if you're speculating on something, then you want it to be just insignificant, to do with your weekly wage. It's just got to be something you invest in and leave and ignore. So I think it's okay there. Right. I think it's right to be buying.
I think, well, we've spent a lot of time on that, but I do think it's quite topical and important to have that outlook with those precious metals at the moment, because we're entering a period of time, in my opinion, where change is imminent, irreversible, and God knows what it looks like on the other side, frankly. But the one thing that's constant, the one thing historically that should store wealth is precious metals. So I think it's worth the conversation.
I agree. Worked in the past, isn't it? Why not? Why not again in the future?
What are we going to trade now?
Well, what I would be trading, mate, is not too dissimilar from you. I like the pound CAD as well, as a short. I think I did take a trade on this a couple of days ago. and I'd be quite happy to get right back in with this one as well. I think you know, we have seen some slightly weaker numbers from the pound. The only problem with the pound, of course, is that the inflation number, though under expectation, still really high. So so it's a slight issue, but I really like the Canadian economy. So I would be trading the pound against the CAD. But seeing as that's really near a low end of a support level, I think the Euro CAD is a lot more interesting. So I'm with you on this one. I really like the Euro CAD. Love the way the chart looks. You know, if you kind of bring in this onto a slightly higher magnifier, then this is a great bar. I mean, you know, love the name of it as well. The game changer. Great. You know, it's a really nice tag. It sort of tells you what you need to know. And I'm
going to copyright these things so that every time somebody mentions them on YouTube, I get the royalties instead of Sony Music.
You know what? If this is in Steve Nissen's 50th edition of Japanese chart candles and patterns, then I think you've got a case to be made. But it's great. Look, I mean, you know,
maybe I should sell it to him.
Well, I think he'd like it, mate. I think he'd like it.
He owes me money. He actually owes me money, Steve Nissen. He owes me money.
Oh, he does.
Yeah,
you signed up with course.
many years ago. Many years ago.
This is a bit problematic. I think when you sort of like break it down, let me just have a look. So if we bring that up there and bring this here, it's a bit messy around here. I think this is the bar, though, isn't it? And the good thing about that. The good thing about this, if that's the game changer bar, though. If you look at this on the price action of the 4 hour, the good thing about this is that we've got this this push to the upside and a bar that embeds probably, well, it's definitely over 50% into the previous bar's range and is back under the trend line. So it's a decent amount of messaging going on, I think, with this particular area here. You know, whether you trade on the daily timeframes or not, you could just trade on the daily timeframes to take this game changer bar, as Jeff calls it, and just enter at the low with a stop at the high, or you could go in intraday and still look for the stop at the high here, still look for the stop up there, but try and enter a little bit higher into the market move. You know, where is it coming down again? Anything that's dropping under this level looks like that daily pivot is holding it up as well. So there's another nice little area that you probably wouldn't want to see broken and closed above. So if that continues to hold, this looks like a decent area for a trade to me, mate. I like it a lot. That's, you know, this bar's too high. You'd want it down there. So that to me looks like a possibility. 61 up. You're talking about 80 to the bottom there. So you're looking at a 1.5 to 1 before you need to really do anything. You take some profit there. I think you're quite right that it could well go through that area. So this is a tradable proposition in my mind and in yours. So I would be backing you up on that one. When it comes down to other things, and the reason we started on gold is that gold, I think, is of interest if that jobs number comes out weak for a long. If it doesn't, you know, if the jobs number shows that there is a pickup in unemployment and employment is fading, gold to me is the long. If it doesn't, then I like euro dollar short and I like pound dollar short and I kind of like the dollar Swiss long, and I've liked this dollar Swiss long. I've got into it. It stopped me out and I missed the second entry on this one, but it's still there. It's, you know, this is exactly where I entered the first time off this monthly pivot. So I'd be, you know, starting to get really frustrated. If this stopped me out again, I'll be really frustrated. But there is a decent area here that's holding nice horizontal level. If you look along there, that's held out a couple of times. So this looks to be the potential low. So you're probably looking at a stop down there if you're looking on longer term timeframes. And that would be this bar here. So you're still within the range of that bar. If you took the top of that bar with a stop at the low, you're basically trading this bar, but with a little bit more information and a slightly better price than the high as well. So I like this, mate. I like so dollar Swissy, if it still exists when that jobs data comes out. Jobs data robust. Unemployment's still low. I'll be going dollar long and I'll be going it against the Swissy. Again, I do like it against the pound because I think the pound's economy is in terrible shape. It's had a bit of a push lower, so it looks pretty nice there though. Really nice, lovely 3-bar pattern. So we got the what is effectively a sort of a shooting star ish. So we've got an evening star pattern here, if you want to call it that. But most significantly about this, we've got a break of this little tiny intraday trend line and a retest of that intraday trend line. And it looks like it's also a weekly and daily pivot there. So pound dollar short, I also like, and probably the euro dollar short as well. I won't bring that back up again because you looked at it and we are top end of the range. So it's just waiting for the data. So we're looking at around about 4.5 hours and I'd be making a decision.
Yeah, funnily enough, on the 30-minute chart, I've got euro dollar long at the moment. Not that that means anything directionally, but
yeah,
interim. Sorry, that's pound news, isn't it?
This is the pound. Yeah, this would be the pound. You know, the pounds.
Yeah. Okay.
Yeah, the pounds had enough to suggest that we could get a little bit of weakness.
I'm actually going to place an order on the euro at the moment,
Okay,
so we'll go there.
Good stuff.
It is a little bit against the bias, but it's a genuine setup, so we'll take it. Let me just analyse this a bit further by the daily chart. Expecting downside from here. So, and we saw a bit of it, but we've hit a support level and we're bouncing back off. 4-hour chart, if it'll go there, there we go. 4-hour chart suggests to me that that level is probably here or thereabouts. Might be in here somewhere, right? There's a little bit of a cloud of a price. So what happens in the meantime really is of no consequence until we hit that level, in my humble opinion.
Yeah.
It is a range. The range is formed and we've come off the bottom of the range. We're looking to trade, in my opinion, not necessarily up to here, but certainly up to a resistance level. That might be it there. The monthly pivot may well be it, and I'm okay with that. So the 30-minute chart is giving me the opportunity to actually trade that up to there with a break and retest, not only of the high of the day, break, retest, but also the resistance trade line. Add to that the weekly pivot, and that's what I call a double cross, right? Classic slingshot chart pattern that's been repeated. There it is there it is again. There's absolutely no reason why I wouldn't trade this long, so I will. I'll give you some levels if you want to follow that. The entry will be at, we'll trade into that high, right? Because it's a new high, and that's crucial for me. If it was not a new high and it hadn't taken out the high of the day, I would not be trading this at all, but happy to do that. So entry above the candle, 10720 will be the entry level. You trade this as 0.5% if you want, because it is counter my bias. What did I say? 10720.
Yeah.
1.0720. The stop loss, we'll just trade the candle. Will be 1.07. Now we'll go underneath that. We'll go 1.0698, just in case the whole number holds it up. And profit. Risk is there, 21 pips. Safe way, take or get safe in the market there, however you want to choose to do that, at 107.31. Target is 107.50. I'll put that on there. 107.50 is your target. Or my target. You can do whatever you want, of course. That gets us out of the market before we hit that level, before we hit those highs. And that's the level I was talking about before. Little inverted head and shoulders here, break and retest of the neckline, if you like. Makes perfect sense to me to trade that on a short-term basis. But I do suggest you get some profit in the bank or make yourself safe at DR1, level of which is 10730. So I'll do exactly that. TP1, 10730. And actually, I'll be a bit aggressive. I won't take anything off here. I'll just move my stops to entry, making myself safe. And I'll take full profit at, what's the entry? 1030 pips. I think that was a nominal anyway, wasn't it? So there you go. There'll be no TP2. It's a buy. So just repeat those numbers for you if you want to follow it. Entry at 1.0720. Stop loss is 22 pips below that, so 1.0698. And stops to entry at 1.0730. Target 1.0750. All out at that point.
Great stuff, mate.
That's euro dollar. I've been harping on this for the longest time, I think 2 weeks now. I've been trying to get into CAD Swiss long, and it keeps, I'll say ranging is the best thing I can say about it. It refuses to break this level, just refuses. I've placed orders all over the shop here, and not one of us been triggered. So I'm just being very, very cautious. I think this has got massive potential for upside, massive potential. There's the level I think is target area, 71.57. We're currently at 68. So a lot of pips to be banked there. Sorry, we're not currently at 68, we're currently at 69. So we've got, 250 pips. Just need an entry, that's all, to trade this back to here. And in extension, I think it's even possible that we go to here. So that's why I'm dead set keen. This is historic lows, all-time lows on CAD Swiss.
That's good.
And every single time we go there, we just bounce, we bounce, we bounce, we bounce. So, I think minimum there, maximum there, then we reassess, I suppose. But I just can't find, I can't get that breakout because it won't break out. For whatever reason, I don't know why. And obviously the best place to trade it from is down here. And there was that little candle there. That was ideal. Had you traded that, you would be in sweet spot right now, waiting for this to break out. We'll see, but I'm hanging on to that one very, very closely. Just can't find the entry. One more, Euro Kiwi. Where's that gone? There. Euro Kiwi, broadening pattern, which, as you know, I've been speaking about those for quite some time. I think this is a very, very good opportunity. I nearly traded that bar this morning, actually, but just a little bit too big for me. What I would like to see on a 4-hour chart right now is a false break of resistance. I'm not seeing that possible, although hang on a minute. Maybe I can. Maybe we've already got it. Current bar. If that closes bullish and decisive, maybe even as it is, there's an entry here. You want to get your stop loss above this level, I think. I wouldn't worry too much about the weekly pivots being broken, retested, rebroken. I'm happy to trade through that. Yeah, okay, I'm going to pay attention. This has got, what, nearly an hour, not even 50 minutes to go. Watch that bar closely, in my humble opinion. And if it is bullish, get underneath it and get your stop loss above this level here, I think. That's Euro Kiwi. I've been sweating on that one as well. We placed a couple of orders on that also without entry. I think there's a whole bunch of stuff there that's worth our attention, Ash. So as much as I can't be in front of the charts, I would really like to be in front of the charts in the next few hours. I might have to come back in 50 minutes and see exactly what's going on with those 4-hour charts.
All right. Well, I'll try and get on Monday, but I'm flying back Monday. So if I'm not here, I'll be definitely in on Thursday.
All right, mate. George and I will be here. There's no holiday or anything on Monday, is there? I haven't even had a look at that.
No holiday, no. And I might. It just depends if I can get online because I've got to get to the airport for. I think my flight's at 11, something like that, and the show is on here our time at 4. So it might be sort of just a case if I can get online somewhere. If I can, then I'll be in with you.
Look forward to that, mate. If not, don't be concerned. George and I will have a wonderful time. See what we can find in the markets.
No worries.
Enjoy IFP. I hope it goes well. And we haven't sung the song today, so assure PB that everything's in check.
Okay.
and he shouldn't get sued in the next 24 hours as well.
Okay, dude. All right, nice one. Have a lovely weekend, mate. Good to see you. And I hope you enjoyed the Super Bowl. I managed to download it.
Mate, what a game. What a game.
Brilliant. It was brilliant.
Man, what a pisser of an end, though. That's a disappointing way to end.
The Eagles, yeah.
Oh, look, I'm okay because I'm red and white all over, but it doesn't matter who's playing in red and white, I go for them.
Yeah.
But just a disappointing way to end a game like that.
Yeah,
really.
Yeah,
but, what a cracker.
Yeah,
cracker of a game.
Well, we haven't got that this weekend, but yeah, enjoy your weekend anyway, and everybody else in the room, enjoy your weekend. Thanks so much for coming in. Jeff and George will see you Monday. I may well see you then as well. But if not, hopefully you guys will still stick around and we'll be back all together on Thursday. But I will see you then, mate.
Happy days, mate. Thanks for coming away from the bar to do the session. Thanks as always for being my mate and me trading buddy. Thank you all for being our trading buddies. Have a wonderful weekend. We'll catch you on Monday. Bye-bye for now. See ya.